Should we be waiting on the sidelines just like Warren Buffett? Personally, I don't think we should be waiting on the sidelines. I don't think we should be trading, investing the same way Warren Buffett does. Thanks again for joining me on my channel. It's Jason Pizzino. If you are new here, be sure to subscribe and hit the bell notification icon so you can be alerted when more videos like this come up. I always find it a challenge to make videos about Warren Buffett or Ray Dalio or any of those big Wall Street guys who a lot of us small amateur guys really look up to and question what they're doing at the same time. Mainly because what we see on YouTube and Google and everything else like that is that people tend to agree with what they're doing. We'll analyze Warren Buffett a lot and tend to say, well, if he's doing it, maybe I should do that too. And I'm a little bit more on the contrarian side. As you can see from my channel, I look more into cycles. I look into Bitcoin and other assets, which is not the way Warren Buffett invests. He's more of a value investor. And so when I create these videos, I'm not trying to, have a dig at other people's ideologies and what they believe in regards to Warren Buffett, but more so throw a few other ideas and questions out there so that maybe myself included can get a broader scope of what it is that he might be trying to do or what message it is that we might be missing from the whole story. And that's what I plan to do in today's video, talking about what maybe we've missed in terms of Warren Buffett's movements in Berkshire Hathaway in the past couple of months. Let's jump into the Berkshire Hathaway annual meeting, which was done about a month ago now. Just run over some of the numbers, get a bit of an idea of what it is that we're going to talk about. And then I want to throw out my ideas, my questions to you to see if maybe I've missed something as well, or maybe you agree with where it is that I'm going with this and maybe we move in that direction in regards to our investment portfolios. So all the stuff I'm about to cover was in the Berkshire Hathaway annual shareholder meeting. There was an interview with Greg Abel. Running over the numbers, year to date, Warren Buffett is a net seller of stocks. Stock market at its worst was down 35%. We had the high in February and a nice major low in March. We don't know if we'll get a break of that low with what's happening now, the market heading up. It was an amazing opportunity to buy. As we know now, Warren Buffett hasn't bought anything, and that leaves the question to a lot of people, is there worse still to come? Should we be waiting on the sidelines just like Warren Buffett? Personally, I don't think we should be waiting on the sidelines. I don't think we should be trading, investing the same way Warren Buffett does. And I'll get to that in a moment. Warren Buffett's cash position, or at least Berkshire Hathaway's cash position, was around 124 billion. Obviously, he sold out of all airline stocks, and that added to that cash position up to around 135 billion. He has equities of about 180 billion. Cash, obviously, as I said, around 135, 124, which is what the records were saying at the time. So that leaves us at around 60% in equities for Berkshire Hathaway and 40% in cash. Does this sound like your portfolio? Are you around 40% in cash and 60% invested? As we know, year to date, Warren Buffett hasn't really done much with this 35% drop in the market. And now why? If you're enjoying the video, be sure to leave a like down below. You know how much it helps out with the YouTube algorithm, so you can see my pretty face pop up with one of those amazing thumbnails next time you're on YouTube. Thanks. Buffett says that he wants to have enough cash on the sidelines in case anything unusual happens. He's talking about maybe another stock market collapse, maybe another pandemic which he couldn't foresee, maybe something like 9/11. Now he's saying these are very unlikely to occur. They all have their different probabilities, of course, but he wants to have enough cash on the sidelines to be able to help out businesses should we see ourselves come through one of these problems again. Essentially, he likes to act as the bank, value investing. He wants to be the financier of businesses which are going through a hard time. And that's how he makes his investments and how he makes a lot of money in the long run. Some points I pick up about Buffett, maybe you're similar as an investor, maybe you're not. Super conservative, only loves to rely on himself. Most of us aren't in that position, and we just look to buy stocks that we think are in that position. Maybe get on the ride for that, get a 50%, 100%, who knows how much. Going back to the point about Warren being in a different league to us, Berkshire Hathaway, hundreds of billions, that isn't us. The people that are competing with him are obviously other big funds like his, but also the government. And the government has a printing machine and they can pump out money whenever they feel like it. And like we saw in this period of the pandemic of COVID, the government got onto those machines quite quickly, produced a lot of cash, and have told us where they're going to be putting this money after they've printed it off the machine, hit a few extra zeros on the computer. And this kind of affects Warren's investment strategy. He's looking for businesses that need financing. The government has just said that they are going to basically finance these businesses, give them 0% loans to get back on their feet. Some of these industries will be all right with the investing from the government, and Warren still needs to sit on the sideline to wait and see what will happen after that. Is this the same as us? Are we in the same position as that? Personally, I don't think so. I think there are better opportunities out there, and I don't need to wait on the sidelines to be able to find an opportunity where I can invest 10 to 40 billion, which is what Buffett said in the interview. He's in a position where he's looking for opportunities of around this 10 to 40 billion dollars. Now, of course, they don't come around all that often. There's a lot less of them, and you need to be investing and making those trades and those plans outside of the public eye. Like, those things aren't done within the public eye, of course, depending on the rules and regulations of the SEC. In the interview, Buffett said he doesn't know what will happen next in the market. But like you know, if you're a regular subscriber, viewer of my channel, you know we talk about the economic cycle here, in particular, the 18-year property cycle, which is connected to the stock market cycle. Right now, we see ourselves at around phase 4, coming in or around that bottom period of the first leg up. We've got another huge leg to go. I'll leave a few links up here to other property cycle videos so you can get a feel of what that's about, catch up on it, study it a little bit. Wasn't something that I came up with, but it is something that I have seen work for the last 10 years, and the history goes back over 200 years. So to recap, I don't think Warren thinks the worst is yet to come. I think he's just in a much different position to what you and I are in. He needs to have bigger cash bases for when these opportunities come up in order to be able to help them. So if he's looking for deals at around 10 to 40 billion, and he only has about 120 billion on the sidelines, if he saw 3 deals at 40 billion, that's it. He can only take those 3 deals. Maybe he'll only take 1 or 2 and keep more cash on the side. That's why he's saying he needs more cash. For his business, that amount of cash, 120, 130 odd billion, isn't enough for him. There's not enough there to take multiple opportunities. Okay, maybe 1, 2, or 3 if they're at that top end of his scale of 40 billion. But really, he needs to have a lot more in order to keep enough cash reserves for the future, which is the way he likes to invest. So the government put a spanner in the works for this downturn. They came in, pumped trillions of dollars in. That stopped Buffett from finding the deals like he found at the GFC. So onto us and what we can do as the small fry in the situation. Personally, I like to look for opportunities, and you probably already know, being on my channel, that have an asymmetric risk for us. I want to see something that has a much greater upside to downside, and don't we all? Like, that's investing at the end of the day. But where I see it is in markets which have smaller market caps, because with smaller market caps means there can be bigger moves. The huge catch to this, and it sounds so simple, but it's really difficult to do, is the emotional wreckage. The 130 odd billion isn't enough for him. There's not enough there to take multiple opportunities. Okay, maybe 1, 2, or 3 if they're at that top end of his scale of 40 billion. But really, he needs to have a lot more in order to keep enough cash reserves for the future, which is the way he likes to invest. So the government put a spanner in the works for this downturn. They came in, pumped trillions of dollars in. That stopped Buffett from finding the deals like he found at the GFC. So onto us and what we can do as the small fry in the situation. Personally, I like to look for opportunities, and you probably already know, being on my channel, that have an asymmetric risk for us. I want to see something that has a much greater upside to downside, and don't we all? Like, that's investing at the end of the day. But where I see it is in markets which have smaller market caps, because with smaller market caps means there can be bigger moves. The huge catch to this, and it sounds so simple, but it's really difficult to do, is the emotional wreckage that can come from this. When we see these markets tank 50, 60, 80%, you know what I'm talking about here, Bitcoin and cryptocurrencies. The emotional trauma that is caused by this for many investors is too much for them, and they tend to sell out at the wrong times. And for these assets, I see them as a great asymmetrical risk, as they are quite small to the downside, comparatively speaking, to where I believe, as a speculator, where they will go to the north side. So that's my take on Warren Buffett as an investor, a true value investor, and how it's different to myself as a small fry in the investment game. Maybe you see yourself there as well. We obviously want to be big fries, but our games are quite different at this early stage. Let me know what you think. Are you willing to take the asymmetric risk on some of these other assets, or do you prefer the safety and conservatism of value investing like Warren Buffett? If you are interested in some of these other assets like Bitcoin, different cryptocurrencies, check out my links down below for crypto.com, where you can purchase Bitcoin and other cryptos, stake them in your wallet and earn a 4 to 18% per annum interest return on those cryptos. You'll get $50 for free with crypto.com. And of course, if you found this useful, helpful, let us know in the comments down below, and be sure to like the video. Spreads the video to more people out on YouTube with their algorithm that's forever changing. Appreciate it very much. You can catch me on Instagram and on Facebook. Link is down below. I'll catch you guys at the next video. Until then, have more fun to get more done.